Hey there, it's May 19th, and this is the Rogue Trader trading update. Yes, it's a couple days late, but hey, we got super busy, and I couldn't do it on Friday or Saturday, so I'm going to do this update on Sunday. Not a big deal. We update our numbers on Thursdays anyways, so I'm using Thursday's data for nearly everything. At least I think it hasn't been updated since Thursday. But things are going quite well. As you probably know, Bitcoin has a little bit of strength. Kind of in the mid to upper mid area of its recent range. Let's pop over, take a look at the account, and we'll also take a look at our numbers. If I spare the spreadsheet here, we can see this is the Synth Miner account. You can see the tab on the bottom, Synth Miner. We started off with 0.0825 in equity, and we're at 0.1065. Pretty damn good. I'm pretty happy with that. If we look at our Bitcoin annualized returns, 185%, 260% USD return annualized. Take a look at the graph here. This is versus hodling. So the blue line is our Bitcoin returns annualized. And again, the point of the synthetic miner account is to just generate more Bitcoin. Just generate more Bitcoin. Hodling is the red line on the bottom. The red line on the bottom is always going to remain flat because you're just hodling. So exactly 11 and a half weeks ago, we started this account. We bought Bitcoin at that time. We thought, hey, we're just going to hold to see what happens versus doing our synthetic miner. And we can see how much more we have, how much more Bitcoin. In fact, if I look at, will give me the percentage. I think we're up 25. Actually, here, let me slide over here. Oh, this is also the USD return. So here's the USD return. So we can see these are going to follow each other because it's measuring in US dollars. But hopefully over time, it'll just keep growing and growing and growing. We'll get a wider and a wider and wider gap. So we've made more than 20. We've increased our Bitcoin by more than 25%. So I'm pretty damn happy with that. If we go over to the Miner Plus account, we call it Miner Plus, but it's not really a Miner Plus. Plus, we basically are selling Iron Condors. And we're limiting we're selling roughly a 25 Delta Iron Condor. Those are short strikes. And we're buying the cover about 10% away from the short strikes. And we're limiting the amount of risk we'll put on that account. So if we're in between 50 and 60% volatility, we'll only have 0.1 of Bitcoin. We start off with, I think, $4,200 in the account. $4,000 is what we started with right here. That's what we bought Bitcoin with 2 weeks ago. We started this, and or May 6th, May 6th, and it's the 19th today. So basically, we're selling these Iron Condors. We're doing a 25 Delta. We're keeping our risk low. If it's below 60% IV, we're only going to have 0.1. If it goes 60 to 100% IV, we'll put on another 0.1. And if we're above 100, we can put on more. Now, at times, we will go from more than 0.1 to 0.2 as we're rolling and adjusting when we need to. But for the most part, we're going to try and keep that really, really tight. And here, I mean, this has only been around for a couple of weeks. So, this doesn't mean a lot yet. The more data points we get, the nicer it'll be. But we started off with 4,000 US cash, 44.88 is where we're at now after 2 weeks. Again, we're not so concerned about cash. We're trying to make a bit of U.S. cash and equity in Bitcoin. Started off with 0.0621. We got now 0.0651 of Bitcoin. Let's just go back to our synthetic miner account. What do we got on? Well, we did a fair bit of trading the last few days. Did some adjustments. The only thing we have left right now is a little bit of May 24th. We've got some 69,000 short calls. They are covered, of course. And what do we got? We got May 31. Now, you're saying, Shane, I'm brand new here, but your Synth Miner account, aren't you just mostly selling puts? Yes, we are. But we had a little bit of a snafu on that big dip down to 57,000, and we're making up for that. So we had a 5-week program to make all that money back. We're on week 3, I think, and it's going very good according to plan. Out at the end of the month, which is the 31st, we've only got some puts, short puts way down at 54,000. Feeling pretty safe there for now. We've got orders to cover. So this account is doing excellent. We're using 12% margin. It's nothing, nothing. Here, let's take a look at the Miner Plus account. And of course, this is the account that does the short Iron Condor or the Iron Condors. What do we got here? We've only got, all we've got right now is May 24th. So everything on the 17th went out flat. I did have to roll and adjust some positions last week. Of course, you can check that out. You can follow us live, join our live streams if you want, or you can join the Roguetrader.academy. And we have daily updates, live streams, and weekly calls, all kinds of good stuff. So what have we got? Well, we've got a 61.72 strangle on. Well, Iron Condor, because I have cover up. Not much to do right now except just let those decay. Going quite well. Maybe we'll get a big move up in the market. Maybe I'll get tested. I hope I do. I hope this position gets tested and put underwater. I'll roll them up further up into calls, or I'll roll them over to puts or into a strangle a little further out. Who knows? Depends on what happens, what the IV's like. But we're using 10% margin. So this is coming along quite well. I'm pretty happy with this. Again, the idea of these accounts was to start them small so they emulate what anyone can do, a small retail investor. Now, I wouldn't recommend starting trading with less than $3,000, $4,000, $5,000. That's kind of the minimum to get in if you're selling options, because you need a little bit of oomph. But we're trying to demonstrate, even with a small account, how you can grow it and how you can have decent returns. We're not taking big risks. Everything we do is limited risk. We're just chunk chipping away. And it'll give you a little glimpse, a little microcosm into how we manage big funds and large books. We would normally never manage a book by just putting on one strategy at a time. We would manage an options book as a book and would be using all the different metrics to do so. But I also want to show, and I never recommend people start to do that. If they start trading options, you want to jump in, be very limited risk, jump on opportunities that look really good, and just let those opportunities or those strategies run themselves through the course, whether they expire worthlessly, whether you buy them back cheaper and you make some money, whether they go against you and how you deal with them. It's important to keep it small and keep it simple. And you'll see how all these different metrics change as the price changes, as the volatility changes, all that good stuff. So that's the update for these accounts. We're pretty darn happy, and let's see what happens this week. Again, I expect the price to keep creeping up. We'll see if I'm right or not.